You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
It's because in my mind, I believe the stock market was the only way really to get wealthy. And I find over the years that when I talk to real estate investors about the stock market, they're also very closed-minded. And my point is if you learn multiple asset categories, it's far easier to make a decision on where to put your money. You're not going to be pigeonholed into one investment. You'll be able to be more opportunistic. Wait, you can say, oh, wait, I have other places to put my money. And I think that could be a bit of a problem for real estate investors, because I know a lot of real estate investors personally, and they just keep buying regardless of price. There's no more thought process. It's just buy, and everything will just go up forever. Well, I keep saying, well, it's probably not going to work out that way.
Well, and I love that you bring that up, because I can put my hand up. Maybe I'm, a victim of that, or not comparing, or maybe just kind of, having the blinders on and saying, I don't understand the stock market. To me, it's like college football. It's confusing. There's a lot of different things. With yourself having, the financial background that you have, you said, with economics degree, and you understand that. I think that's the biggest thing, is that the financial literacy is part of that, right? Of comparing that, that's apples and oranges. Well, they're both fruit, right? So you can still compare the two, right? So when you're talking to, use the real estate investors, or maybe someone like myself that is saying, hey, where do I start? Or how do I get involved? Or how do I even make that comparison? Because I know I can touch one of my properties. I know the cash flow. I know who my client is. Where does someone start or begin to learn? And like you're saying, household names, people are, the big stocks that are out there and that go across the different, tickers and things like that. Where do you get that initial knowledge that someone doesn't have that economics background like yourself to kind of compare the apples and the oranges?
First of all, I will say I learned none of this in school. Nothing. Zero is taught in school. Nobody in school teaches you how to make money. They just teach you how to get a job. So when I went to the University of Toronto and got an economics degree, I learned nothing about making money. Not one thing. So that's the first thing.
Okay,
you don't need any background. If somebody really wants to get started, the reason I don't want to get too much into the stock market, but we created Theta Trading 2 years ago for that very purpose, to give people education into the stock market and financial literacy in the market itself. And I would suggest the first place to look is maybe just go to our YouTube channel and just start educating yourself. Just start thinking about it. The same thing I did when I first started buying real estate. I started working out models. Okay, how does it, if I put down 20%, I extrapolated outwards a 4%, 5% growth rate. If I had positive cash flow, I started building out models. If I had one property, two properties, three properties. The key with real estate is leverage. Leverage is what really does it for you, right? You own a $20 million portfolio or a $30 million portfolio or something like that. How much of your own money is in there? Maybe $8-10 million bucks, right? So it's not, you got that leverage factor, and let's say you got a $20 million portfolio and it goes up, 8%. Well, that's $1.6 million. It's very difficult for people to save $1.6 million doing anything, right? That's why real estate is so powerful. Real estate is challenging is the cash flow. Cash flow is very, very challenging. So that's what I would suggest for people. I would suggest start educating yourself and start seeing whatever you do. Don't be closed-minded though. That is what I'm really good. Don't be closed-minded, because most real estate investors, they're like, real estate is the only thing in the world that works. I'm like, that's a horrible attitude to have. Terrible. It's going to get you in a lot of trouble. But, it's hard to tell that to people who are fixated on one thing. So
it's so easy to fall into that trap, because a lot of us have been burnt in 2008. That's when I had a lot of stocks and different things. I didn't self-manage, so I had no idea. I just put the money. I'm like, let's hope it does something. And for the most part, it went down. And then a lot of investors got scared and turned to real estate. That's my story anyway. And I know.
But the thing is, the stock market, for example, the stock market's always recovered, right? It does go down from time to time, recovers. But here's the thing with the real estate market now. Again, I'm a real estate investor too. But from in the Southern Ontario region, from 1999 to today, okay, that's 22 years now. This market has gone nowhere but north in a hurry. To me, at some point, it's the same thing that happens in the stock market. We look at irrational pricing and say, hey, that is now getting to be unfounded, irrational. If I'm buying a commercial property, Hamilton, with a 3 cap, why would I do that? I don't. there's
Just
no
throw your
reason for
money
me
out.
just because I don't understand how to do anything else. That's why I'm buying a 3 cap, or
Yeah.
unless I really, really believe in something. But my expected rate of return on capital, my expected return on invested capital, how high could it be when I'm buying it at such a cap rate? Am I expecting cap rate compression? Am I expecting rates to go down? I don't think so. My point is, when people start buying at these things, at some things when valuations don't make a lot of sense, it's because they have excess capital and little knowledge. A lot of money, no idea what to do with it. That is the problem. And that's kind of when you see market tops. Same thing happens, by the way, in the stock market. They're very transferable that way.
Yeah, no, I'm listening to this, and you know what? It's true, because I'm victim of that, of maybe looking at only one way, and there are different ways to produce income and to provide that, and looking at that. So, like again, at the end of the day, when you're looking at real estate, whether it's the stock market, you're always about that time investment. So, in terms of your real estate portfolio, the time that it took you to build that, from the time that you're spending on educating and learning about the stock market, talk a little bit about what the investment of time would be for somebody, to get to a certain point where they're confident as you are, in terms of putting their money in the stock market.
Yeah, real estate, it took me a long time to build my real estate portfolio. When you're doing like, your BRRRR method, like there's a lot of work involved. Like there's no doubt, there's a lot of work involved between, managing contractors and dealing with the bank and insurance companies. Luckily, from the beginning, my first property, I went with a property manager. And then after a certain time, I got an assistant. And to this day, I have an assistant who does everything for me. She's wonderful. She does all my paperwork. I'd be in terrible, terrible trouble without her. And she coordinates everything with the property manager, which means I get to do my favorite thing, which is nothing. I'm down to about 1 hour a month, right? We have one call per month, and I have one hour per month. Now, initially building the portfolio took a lot of work, but now at the maintenance level, it's nowhere near as much work because, you've got a property manager and then you've got a full-time assistant who looks after everything. So it's a very easy thing to manage. I did a course back a few years ago called Strategic Coach by Dan Sullivan. It was a very expensive course that I paid for 4 days, but I learned something extremely valuable. Outsource, systemize, delegate all tasks in your life. And ever since then, I learned the value of time. Like, not doing groceries or cutting grass or cooking your food or all these other tasks in life that take up so much of our time. You just translate that to the business world. So I did that with real estate. So I'm down to 1 hour per month.
Wow.
So when I want to add to my real estate portfolio, it'll be a lot easier to add. I'm just going to add, move into the process, right? Add, move into the process. And that way, quite frankly, even if I'm not there, all I really have to do is identify the opportunity, and my assistant and property manager can take it from there. So,
That's excellent advice.
Yeah, it's a good spot to be in.
And it's so important.
Sorry, go ahead, Francois.
It's important to start early as well, before you're overwhelmed with, because it's easy in real estate. Like you said, the BRRRR is a lot of work, and you get done, covered in paperwork, then year end, and you just want to give up. So it's important to get assistance. And in Canada, it might be a little pricey. It's not for everybody, but think outside the box again, be open-minded. You can also virtual assistants.
You can outsource the virtual assistants. Yeah, absolutely. Yeah. So it's the mindset. Most people have the mindset of, I can do this task on myself, but the understanding has to come that time is the most valued commodity. So your time is the thing that you have to try to preserve. So outsource all these tasks to somebody else, and you focus what you're good at, which is scaling your real estate portfolio. Real estate's a portfolio. Real estate is something that can be scaled well if you have a good system in place, if you have people on your team that you can trust. But that's the key. You've got to build a good team, and then it's pretty easy to scale, especially on the commercial side. I know you guys have commercial properties too, right? Which is a great thing. You don't have to worry about income and all that stuff. It's very simple, right? Your DCR, either 1.1 or 1.2, 1.15, depending on institution. That's kind of all you got to worry about. It's a lot easier.
Yeah. No, that's great advice. And maybe we talk about delegating, having the right team members. What are some other things that are translatable from looking at real estate investing into stock market trading and investing? What are some of the things, that the skills that maybe your own personal skills that are translatable into those two different realms?
I think identifying asset prices. Think about it logically. Okay, money will always flow to where it gets the best return. Okay, that's what it does. Now, educated, intelligent, informed investors understand where to put money, right? Now, the reason some asset categories get the bubble territories, as it has happened with the stock market in the past, and has happened with real estate in the past, is because it's too much money and not enough knowledge chasing one particular asset category.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.